Let's discuss that with Tushar Mahajan, Head of Derivatives. He represents Nomura. Tushar, fantastic to have you back. Thank you for joining us. Do you think we have a solid trading bottom in place after today's gap-up start, or in the near term it's too early to predict that and we will do nothing special and today's gap-up start is no measure of what lies ahead?
Well, I think today's move is definitely very encouraging, especially given the fact that we've broken past that 5900, 5920 odd levels, where we were getting stuck for the last almost 3 weeks. Every time we tried to break past that, we saw markets followed that with a sell-off back down. So I think the fact that this move up is sustaining above that 5920 and, after the gap up opening, unlike in the recent times, we are building onto that momentum to pick up. I think hopefully, this calls for a better move, and we could see now a move up to the 6100 levels.
Tushar, sectorally, what do you think is going to lead the market up to that 6100 mark? Because the key sectors in the market have been underperforming. Banks largely, in fact, I could say that for the entire rate-sensitive lot.
Which is pretty much true. I think what has been happening in the market ever since we had the first FOMC comments around the QE tapering on May 22nd is the fact that, yields have been behaving in a manner which wasn't really anticipated by the markets per se, and that's what you saw with the currency as well, which adds on to the inflationary pressures, and, you had a school of thought which started talking about rate increases and all of those kind of things. But I think given what happened yesterday at the FOMC and the fact that, Mr. Bernanke toned down a lot of his expectations, we could see that trade begin to wind down a bit. And I think, if we are talking about a 6100 move up from here in building onto the momentum of today, you could see these kind of names especially moving up. So, commodity names as well as metal names which could get the markets a bit higher to the 6100 odd levels.
So in the book which you run, have you cut your shorts? Have you initiated longs?
We pretty much run books for clients effectively. The positioning is definitely more on the long side as of the moment. But given that, it's more macro driven right now rather than really bottom up, I would advise that, you have to be nimble at this point in time, and at the first signs of pain which begin to re-emerge, if at all, you will have to cut down those longs as well.
But have you changed the directional move only after last night's Fed communication, or before the Fed move also you were largely trading bullish?
Well, we were, the sentiment was beginning to turn bullish for sure. But, in terms of, let's say adding the move, we were watching up to that 5900, 5920 odd level. So, the fact that the market has sustained above that level is what has, added conviction to our momentum trade.
Tushar, what's happening with Infosys? Is all the negative in terms of a guidance cut something in the price? Because the way the stock has been running up, it's pretty intriguing. Or is this just a build-up only to short tomorrow?
Not necessarily. I think the other development which has happened, which is probably keeping the entire IT pack up today, is the dilution on that US immigration bill. I think that was a big overhang on the sector as a whole. So I think that's probably the big reason for today's move. Though tomorrow, the options continue to trade rich, and, they are still pricing in a large move tomorrow post results. My own sense is that, given that it's going to be Mr. Narayan Murthy's first outing on an earnings day after having taken over, people are going to be looking at it from a guidance standpoint, and, if that gets something which soothes investor concerns, you could see the stock pick up further steam from here on.
Right, Tushar, now Infosys has been a volatile stock. After Q3 numbers on the result date went up 17%. After Q4 numbers on the result date came down 20%. Now, such a sharp volatility is something which traders always look forward to. So for someone who wants to make a quick buck because of the result volatility, how should he position himself in Infosys?
Well, I think this trade has been on, and people continue to position itself in trying to buy at the money options on Infosys walls, even though they are expensive. And the fact that people buy, that's the reason why they are expensive. You could look to buy the Infosys 2500 straddles, at this point in time. And if you do get a move which is larger than the 10-12% premium that you're paying to buy those straddles, will definitely end up standing to gain money. There is, however, an alternate view now emerging at this point in time, which seems to think that, with guidance coming back to the company, which is going to be more trustworthy and all of that, you would probably, bid goodbye to the big volatile moves on the earnings day. And as a result, you might want to take advantage of that and eat up the premium. However, I think I will probably wait for what happens tomorrow. At this point in time, I would like to play with the long option strategy.
Tushar, there's been significant outperformance when it comes to the entire pharma pack. I mean, be it a Lupin or a Sun Pharma. In fact, as I speak, Sun Pharma has topped even 1100. Do you think this tilt towards the pharma pack is going to continue for some more time?
I think earlier it was just the, the defensive trade, which was, keeping both the consumer and the pharma stocks up. But now incrementally, I think the rupee benefits to the sector as well are beginning to percolate down. And given the fact that, the companies haven't really disappointed as much on the earnings as well, my own sense is that in the frontline pharma names, and in that I include names like Dr. Reddy, Sun Pharma, Lupin, that outperformance may begin to continue.
Do you think much of the technical adjustment in HUL is behind us? We all know what happened to HUL pre-open offer and post-open offer.
Yes, largely. So if you look at the open interest moves also over there, I think the huge spike that we'd seen on the open interest over the last 2 months, ever since the open offer was announced, that is beginning to come off. The stock, as a result of the technical adjustment, kind of opened on the 5th around the 630 odd levels and is now stabilizing around the 600, 590 odd levels, which coincidentally happens to be the open offer price. So I think from here on the stock will take its own trajectory with respect to fundamentals and with respect to earnings and those kind of things. But the technical adjustment post the open offer, and Unilever has also said that they are not looking at further now increasing the open offer price to get back the stake still to 75%. They're happy with what they got at 66-67% on stake. So I think the technical move on the name is behind us, and now it's probably going to trade more fundamentally with around the 550-560 odd level forming the base for the stock. The fact that people did not really tender the stock speaks a lot about the kind of faith that investors have put in onto the management and the company as such. So I think the downside on the name may still continue to be limited, and from here on it's really earnings and fundamentals that's going to drive the move here.
At the current juncture, where are you an option writer, whether a put writer or a call writer?
Well, I think, really, like I've been saying, that this is all the moves that we are seeing in the markets are a result of a big macro trade which is going on, be it on the bond markets, be it on the currency side, be it on the equity side. At this point in time, although one may think that walls have inched up higher, from the 14-15 odd range that we were earlier looking at versus, the 18-19, which seems to be the new normal, which has come to be established. One may be tempted to say that, I will be a more aggressive writer. However, I think that given that we are still living in an area where we are seeing almost 40-50 point gap up, gap down openings on an everyday basis, the fact that, there is new data points which is coming on an everyday basis, and, markets interpretation of how the global liquidity is going to pan out over the next few months. Given all of these uncertainties that we are currently living in, I would tend to stay away, and I would advise people to stay away from writing at this point, even though the premium may look more attractive. For the option writer, when you have gap up openings and gap down openings, that can take away a lot of that sheen away.
Tushar, what to your mind is happening with the education stocks? I mean, is there something that we've missed out, or this is, just purely bottom fishing happening right now?
I haven't seen those names in a while, ever since they've been out of the futures list, really. So, kind of been out of my radar and, hugely volatile. So, just keeping them away.
Okay, fair point, Tushar. Let you go on that note. Appreciate you taking the time out and joining us this morning.